Hey everyone, what's going on? Have you ever wondered as to what is blockchain and cryptocurrency, and how people are making profit from it? So, my dear friends, today in this video I'll show you the entire concept of blockchain technology along with its history. So, blockchain has become one of the most popular topics in the technology and investment worlds since the invention of cryptocurrencies a few years ago, and the majority of businesses are leveraging this technology to make money. So, what is a blockchain? Blockchain is a peer-to-peer network that was first proposed in 2008 as part of the Bitcoin proposal. A blockchain is a growing collection of data, known as blocks, that are connected together via cryptography, with each block including a cryptographic hash of the previous block, referred to as a timestamp. Satoshi Nakamoto and his gang of people promoted the blockchain. So now, you might be wondering about where this technology is used for, and what is the actual purpose of using blockchain. This technology is now employed for a number of reasons, including smart contracts, financial data storage for banks, data management for government agencies, and so on. Blockchain's major purpose is to allow digital content to be recorded and disseminated without being changed. As a result, blockchains are often referred to as a distributed ledger technology, or DLT. Now, let us see the advantages of using blockchain technology and how corporate companies are making profit from it. 1. Developing software for a specific purpose. For a specific reason, many companies develop blockchain software for their clients and purchasers. For example, building blockchain for cross-border payments and a supply chain and trade solution for businesses. This software in general aids many firms in settling their accounts in a transparent and efficient manner. The leading software developers in blockchain technology include IBM and Deloitte. Selling these blockchain solutions to other firms is how they make money. 2. Providing software service. Companies can also profit from this technology by giving software services to other enterprises. They assist companies in developing APIs, cloud storage, data management tools, and other business solutions. In the world of blockchain, BlockCypher is a leading service provider. 3. Earning from transactional fees. Many companies are now developing blockchain infrastructure for large firms and institutional investors, and this is one of the most effective ways to profit from transaction fees. Institutions or businesses that use blockchain infrastructure must pay the developers a subscription fee as well as a transaction charge. They are remunerated for conducting business and providing services. 4. Contract agreements. Companies that use blockchain technology can also make money by negotiating contracts with other businesses. They design and develop blockchain apps while also forming contracts with other companies to provide blockchain infrastructure. They also sign a contract to host the service for a set amount of time. 5. Speculating in cryptocurrencies. The majority of people have a misunderstanding regarding blockchain technology. They are aware that blockchain is only utilized for Bitcoin transactions. Bitcoin, without a question, has revolutionized the digital currency sector. In fact, it is for this reason that blockchain has become the most widely discussed issue on the internet. However, blockchain isn't only about Bitcoin. It's also about a variety of other cryptocurrencies. Almost every blockchain network has its own crypto coin for settling intra-network transactions and payments. 6. Banking transactions. Blockchain is being utilized to conduct transactions in fiat currency, such as dollars and euros, in addition to cryptocurrencies. Because transactions can be vetted and executed outside of typical business hours, this could be faster than sending money through a bank or other financial institution. 7. Asset transfers. The blockchain can also be used to keep track of and transfer ownership of various assets. This is particularly popular with digital assets such as NFTs, which are used to indicate ownership of digital art and media. However, blockchain might be used to process the ownership of real-world assets such as real estate deeds and automobiles. The blockchain would be used by both sides of a deal to verify that one owns the property and the other has the funds to purchase it, and then the sale would be completed and recorded on the blockchain. They could transfer the property deed without having to physically submit the paperwork to update the local country's government records, and it would be updated in the blockchain immediately. 8. Supply chain monitoring. Massive volumes of data are involved in supply chains, especially when commodities are transported from one part of the world to another. It can be difficult to track out the source of problems, such as which vendor supplied low-quality goods, using traditional data storage methods. It would be easier to go back and check the supply chain if this information was stored on blockchain, as IBM's Food Trust does, which employs blockchain technology to trace food from harvest to consumption. 9. Voting. Experts are investigating how blockchain may be used to prevent voting fraud. In principle, blockchain voting would allow people to cast votes that couldn't be tampered with and eliminate the need for humans to manually collect and check paper ballots. 10. Smart contracts. Smart contracts are digital contracts that are automatically executed once certain circumstances are met. For example, if the buyer and seller have completed all of the deal's stipulated requirements, a payment for a good may be released immediately. 11. Reduced costs. Smart contracts are digital contracts that execute themselves when certain conditions are met. A payment for a good, for example, may be released quickly if the buyer and seller have met all of the deal's agreed terms. 12. Speed. Blockchain technology can process transactions considerably more quickly than traditional techniques. In some situations, a transaction on the blockchain can be completed in seconds or less. However, because the speed with which a blockchain-based system can execute transactions is dependent on a number of factors, including the size of each block of data and network traffic, times may vary. Walmart, for example, utilized the technology to track out the origins of sliced mangoes in seconds, a procedure that previously took 7 days. 13. Immutability. Immutability basically means that transactions can't be modified or deleted after they've been recorded on the blockchain. All transactions on the blockchain are time-stamped and date-stamped, resulting in a permanent record. As a result, blockchain may be used to track data across time, allowing for a safe and reliable audit of data. 14. Tokenization. Tokenization is the process of converting the value of an asset into a digital token, which is subsequently stored and shared on the blockchain. Tokenization is caught on with digital art and other virtual goods, but it has broader uses that might help corporate transactions run more smoothly. Hey, we hope that the benefits and reasons we discussed above have helped you grasp the significance of blockchain and why it is so significant in today's world. Still, if you have any questions or recommendations, please leave them in the comments section below. To receive more updates like this, click the like and subscribe buttons. Thank you for tuning in.